Welcome back to MB Capital Strategies. Today we continue with the mining series, this time with Anglo Ashanti. Anglo Ashanti is currently paying over 4% in dividends. The yield is close to its all-time high and is benefiting massively from the gold price, which is well above $4,000 per ounce. We're seeing record cash flows, high payouts, and a stock that seems to be doing everything right. But is this the sustainable cash flow story? Or are we just experiencing a lucky cycle that could quickly evaporate if the gold price falls? In this video, we'll take a sober, data-driven look at dividend quality, free cash flow coverage, cost structure, valuation, and the real cycle risks. No gold hype, just the question. Does Anglo Ashanti belong in a dividend portfolio, yes or no? Anglo Ashanti is one of the largest gold producers worldwide. Globally diversified in Africa, Gold-ATH and Obuasi, Australia, and now newly in Egypt at Sukari. This means, so to speak, that we no longer have any single country risk. Production and growth are between 2.9 and 3.225 million ounces of gold. We have year-over-year growth of 9 and 21%. The main drivers are acquisitions. 2024 Tier 1 Sukari mine as a game changer. We have a long mine life and strong margins. AngloGold is not growing blindly, but rather optimizing margins and cash flow. This makes the stock extremely strong during a boom, but also dependent on the cycle. The 52-week high and low are at 19.76 euros, currently at 73.75 euros. The analysts have set a target here of 83 euros and 59 cents and investing at 72 euros and 11 cents. I do all my fundamental analysis with InvestingPro. If you also want to use InvestingPro, you can get a discount through my link during the promotion, 15% off. How am I invested here? Invested? In total, I hold 3 shares. My entry price was 36 euros and 14 cents. A total of 108 euros and 42 cents invested. Dividend of 3 euros and 85 cents. Currently, I have a price gain of 104.81%. That corresponds to 113 euros and 64 cents with a current total value of 222 euros. Now let's move on to the dividend. And the dividend yield is currently at 4.31% based on a share price of 80 to 85 US dollars. The new dividend policy, at least 50 cents per year and plus 50% of free cash flow in reality. We have very high quarterly dividends. In quarter 3 2025 at 91 cents and year to date already over 2 US dollars, annualized significantly higher. Payout at 50 to 80% of free cash flow depending on the quarter, currently at 56%. The classification significantly more aggressive than at Newmont or Barrick. We don't have a fixed guarantee, but rather a cash flow logic. For this, it is currently extremely well covered. Conclusion here, not a dividend aristocrat, but in a gold boom, a real cash flow machine. Now let's get to the decisive factor. The gold price is currently at about 4,300 US dollars per ounce. That is far above production costs. What are the effects of this? We have an operating margin of over 40%. And the free cash flow exploded in Q3 alone to over 920 million US dollars. That corresponds to a plus of 140% compared to the previous year. From quarter 1 to quarter 3 combined over 2 billion US dollars. And this turnaround came in 2024 thanks to Sukari integration with clear cost and capital discipline. This explains the high dividends, the buyback leeway, and the strong share price performance. But the leverage works both ways. Below 2,500 to 3,000 US dollars per ounce, free cash flow shrinks massively. Now let's move on to costs and also the risks. The costs are between 1,580 and 1,705 US dollars per ounce. This level is higher than at Barrick or Newmont. But currently that's irrelevant because we're seeing a gold price of 4,300 US dollars. So far inflation has been well cushioned. What are the main risks? We have significant exposure to Africa and Egypt politics, currency, royalties, higher volatility than with the big two. ESG and permitting, water and environment. And realistically speaking, below $2,800 per ounce of gold, things get uncomfortable. Currently, there is no acute risk. It's more of a future issue. How does the valuation look? We have a P/E ratio of 19 to 22 for a gold mine in a boom. That's not cheap, but profits are rising sharply, which makes sense. With record cash flow, we now come to the assessment. AngloGold Ashanti is not a core holding, not a buy and forget dividend stock, and it's a defensive cash flow pillar. AngloGold appears it is not a core holding, not a buy and forget dividend stock. The stock is not a defensive cash flow pillar, but rather a brisk cash flow and dividend booster. Here we have a strong leverage to the gold price, ideal as a tactical addition. Currently, this is my strategy. I am holding and would also slightly increase my position on pullbacks, and I will actively monitor it, including, of course, the gold price. So what is the conclusion? The dividend is currently high and well covered. The cash flow is tremendous. Strong thanks to Sukari. The valuation is okay but not cheap. The risks are clearly cyclical and region specific. Which gold mining stock would you hold in your portfolio? AngloGold, Barrick or Newmont? Which gold major fits your strategy better? Write it in the comments and let me know, and feel free to like this video if you enjoyed it. If you're not a subscriber yet, I'd really appreciate it if you subscribed here. Otherwise, I wish you successful investing. Of course, this video is not investment advice, it's just my personal strategy. I look forward to welcoming you in the next video. Until then.